These are numbers that take time to gather. Some of them are through research, others we have different sources of this information. And when you get numbers from here and there, of course, you have to generate the story. One is the numbers verify, but also you don't just throw numbers there. So what we are here is to tell an economic story, what is happening in our economy, and we use the numbers as facts to demonstrate the facts. And the good thing is, of course, we're building strong partners in this, and so we are happy with our data sources, and so and happy with the audience. The good thing, of course, is getting the right audience, and happy with the media that you help us to take this even beyond the few people we have in the room.
Right. Governor, if the Rwandan economy was actually a patient and you were a doctor, you seem to have given it a clean bill of health, that is the Rwandan economy, because it has actually recorded a high performance of real GDP, which is actually standing at a double digit of 10.6% in 2018 Q1 from 1.7% registered in 2017, almost the same period that was Q1. What actually did drive this double-digit growth?
As we said, yes, economic performance for the first half of this year is going to be much higher than the first half of last year. We haven't got the final numbers for Q2 2018. But we had the Q2 2018 from the Institute of Statistics growing at 10.6%. And as we said, when you look at what we compile at the central bank, frequent economic numbers, what we call composite of indicators of frequent numbers, we see that growing at 15.7% compared to 7.4% we had in the first half of last year. So already what we can see from the central bank point of view, we see this half growing well. This is linked to two main areas. One was agriculture that performed well in season A, that's first quarter of this year. And this spills over into Q2 of the year. With good performance of agriculture, this also spills over into services, transport, and so this is one driver. Then the other one is construction that transport.
Right. Our apologies for that mishap right there. We definitely are talking about the change of the monetary policy framework. Definitely, let's now listen in to that particular conversation with the Rwanda Central Bank Governor on the change of the monetary policy framework.
Yeah, as the economy is modernizing, we need to modernize our monetary policy as well. So this using interest rates now, we are influencing people's decisions to take a decision to spend or to borrow to spend or to save, depending on the interest rates. So if we think there's pressure on inflation, we raise inflation, our policy rate, and therefore the money market rates will go up, and people will be happy to keep the money in the banks because they're earning higher interest rates. And when there's condition that we need to see more money being pumped into the economy, we loosen our interest rate, like what you saw in the Western world, where they had to make it even negative to discourage people from keeping money in the banks to go there and spend it, or even the financial institutions, instead of keeping the money in the securities, say they need to lend it out. So keeping it with you is costly. So with these new tools, you are able to influence people's behavior based on the price of money, not the volume of money. And we are also not just the tools, but also the capacity to project. We call it forward-looking monetary policy. So when you invest money, you are not just investing it for today. You are looking at 3 years or so ahead of you. So what we are comfortable with us today, we've been able to build the capacity to project the behavior of the economy in the future. So this is a forward-looking monetary policy. And when the rates we move, we are telling you what we see in the next, in the medium term. This is the behavior of the economy. So we are telling this through this rate we are applying today. And so the good thing is, as we've been using interest rates not as our main policy tool, but as you know, every quarter the monetary policy announces a policy rate. Though we are doing it as a try for the last 3 years. Now we are confident we can use it as the only tool for monetary policy.
Right, there's been a bit of confusion, which I think it would be very nice for you to actually clarify this, the difference between this policy framework from inflation targeting. Is there any difference? Can we call it that?
Yes, what we are moving into, we call it inflation targeting light. So we give ourselves inflation objective, and we normally use our tools like normally the objective should have been the inflation, and we use the tools like the interest rates to achieve this objective. But because of the development of our economy, the level we are at, the transmission mechanism that is still weak, the big other factor that influence inflation as agriculture, as I said, wouldn't want to come out stronger pronouncing ourselves on inflation targeting. But we have an inflation objective. When we announce this, we announce the range of inflation that would, as our objective, that we would want to achieve. But we don't want to make that big noise for now, until the economy really supports us.
So what do you tell someone who has fears that probably this is one of the things that probably we are rushing into, not well tested, that it will actually work for us because we have different economic contexts? What would you tell them? I mean, those who think we'll get to a time where we'll want to backtrack and go back to the previous policy.
No, I don't think there's any commitment that we are making today that is putting us in any program. Harmonizing economic management, I think that is, we are all modernizing. It's like we are not copying anything unusual. It's really working, trying to move into the global best practices in economic management. Harmonizing regulations across the management of our financial sector. That is, even if I was acting alone or whoever, it would automatically, if we really want to move into modern ways of managing financial sector of the economy, yes. When we reach the point where we now unify ourselves as one monetary authority, that's when we need to be sure that all the risks are really dealt with, or we have mitigating factors. That's when you can start questioning, are we really ready? But for now, whatever we're doing, setting the ground for that, I don't see any risk at all we are taking. If anything, it's positive that we move into this direction as a region, because it will attract investment, it will ease trade across the borders, and as we do this, we are creating an environment that at the end of the day will enable us to move into now the single currency union, so which will come at this time as we had agreed in 2024.
Okay. Finally, Governor, the question of the sectors that actually are creating appetite for investment looking forward. What are those areas?
One, I think manufacturing is one area that I see should attract a lot of investment going forward, because as a country, through the Made in Rwanda push, this is one area that should attract investment. Tourism remains a key sector for this country, and where there has been a lot of investment in these hotels, but there's still room for investment in tourism. ICT, today we have these incubators that are coming up in our country. There's the ICT sort of hub we are building in the economic zone that will generate big brains from the different education institutions there. So how you invest into using these, tap into these brains coming out to generate IT products, I also see this as a good investment going forward. Of course, as I said, agriculture remains, and mining, these are primary sectors that still have big potential for investment.